What's up, guys? I hope you're all doing okay. As the thumbnail suggests, Bitcoin has taken a bit of a nosedive. In this video, I want to talk about the fundamentals causing this large sell-off, the levels to the downside I see as strong support, and how I'm going to trade this price action. So firstly, engineering aside, German institutions have yet to make a good decision in the last 100 years. They're dumping their bags on our heads, and it looks like Mt. Gox is prepping to do the same. The reasoning behind this is complex, but put simply, they are set on reducing exposure to the crypto market. Why? Well, because they may well believe that we are at a cycle top. Retail mass adoption is not picking up as rapidly as in previous cycles, and Jason Derulo made a meme coin.
Hey, what's up, people? Listen, the bullshit that happened today in the crypto space was absolutely crazy.
Maybe they're all just fucking idiots. All we can do for now is speculate and watch as things unfold. Bitcoin and most major alts have taken out high time frame liquidity with this move down. In fact, the last 24 hours have been the largest liquidation event since the FTX collapse. The reality is that bulls have had a very easy ride for a long time now and needed to be punished. This pullback was overdue. My thoughts remain fairly unchanged. I don't think we have seen a cycle top yet, but we did need to nuke these longs before continuing our ascent to Valhalla. This bull market has largely been without any huge major pullbacks or liquidation events. In some ways, what is happening right now is actually very healthy for the market. Your personal portfolio might not currently reflect this, but consider it a good opportunity to bid anything you have high conviction in. In terms of technicals, firstly, let's take a look at this range deviation long I shared in our last video. This is still in play. The deviation is slightly larger than anticipated, but it's still valid for now. We need to see a reclaim above the area marked reclaim and a change in the local market structure before committing to a long position here. This would be the ideal trade for me. You can jump in here right now and try and catch the lows, but it's always better to wait for confirmation, in my opinion, because as long as people are trying to catch the low, price will likely continue to stop them out. Nevertheless, further downside is possible, so let's take a look at major levels of support beneath us. Two areas primarily stand out to me. Firstly, we have this small area of consolidation to consider, and further down this larger area of previous range and consolidation. Now these are both fairly broad areas, and narrowing down an entry will depend on price action when we enter them, but they are places we can look for a reaction should price continue to fall. This parallel channel is interesting, and allowing for minor deviations, we may continue to trade within this, creating a medium time frame bearish structure and possible descending wedge as price develops before potentially breaking out to the upside. Should we catch a long entry, given current market conditions, we should ensure to take some profits early and move stops to entry as quick as possible. Similarly, if you're holding shorts currently, well, first, congratulations and fuck you, but also remember to take profits, move stops, and let what's left run. This here is an interesting chart I found while scrolling X this morning. I'm sure some of you have seen something similar. Is it realistic? Well, yes, but also a bit optimistic. Previously, post-halving, we have seen price fall before all new time highs. But one thing worth considering is throughout previous cycles, we have not seen regulated institutional adoption. This changes things and adds a major layer of unpredictability. Ultimately, if you are currently sidelined, the best port of call may be to sit on your hands and wait. Alternatively, if like me, you believe we will see higher prices in this cycle, then you can start to cost average into assets you want to hold long term. Using leverage right now is like trying to take a shit in a hurricane. It's probably not going to end well, but feel free to go ahead and try. That's about everything for today's video, guys. Remember to like and subscribe. You can also follow me over on X if you want. Take care, and I'll catch you in the next one.